I had a conversation with a client not that long ago. Let's call her Linda. Linda is 63, about 2 years from retirement, and Linda is sharp. She pays attention. She asks great questions. We were going through her portfolio together, and she pointed at her screen and said, Darren, what is an ETF? Because I see it everywhere, and I still don't really know what it is. And I love that question because Linda, I know, is not alone. ETF is one of those terms that just floats around. It's on statements, you hear it on CNBC, in the news, in conversations, and most people just kind of nod along, maybe not quite sure, but afraid to speak up to demonstrate that maybe they're not sure. So today we're going to fix that. I'm Darren Vilardo. If we haven't met yet, I'm the founder and senior advisor at Tekton Wealth Advisors, and we specialize in helping folks get ready for retirement and indeed enjoy it once they're there. This is our Financial Jargon series, the series where we take one word at a time and just break it down in plain English. No pressure, no sales pitch, just clarity. Today's word, ETF. ETF stands for Exchange Traded Fund. Here's the plain English version, folks. An ETF is a basket of investments. It could be stocks, bonds, options, any of the above, really, that you can buy and sell on the stock exchange all day long. They trade just like trading a single stock. That's really it. And holds a bunch of stuff inside it, and it trades like you're trading one thing. Now, here's how a professional might define it. These financial professionals in their golden towers, right? Just sit with this for a second. An exchange traded fund is an investment fund traded on stock exchanges, much like stocks, holding assets such as equities, bonds, commodities, or with large arbitrage mechanisms designed to keep trading close to its net asset value. Net asset value, arbitrage mechanisms. I love it. Here's a translation, folks. It's a basket of stuff that trades like a stock. Now, here's the way I explained it to Linda. An ETF has two jobs. Job one, hold a basket of investments just like a mutual fund or an index fund that we've talked about before. It owns a whole collection of things inside it. Could be 50 companies, could be 500, could be bonds. Job number two, trade on the stock exchange. You see, unlike a mutual fund, which you can only buy or sell once, those things trade at the end of the day after the market closes. An ETF trades all day long. The price moves in real time. You can buy at 9:45 in the morning or 3:55 in the afternoon. It's that combination, a basket of investments plus the intraday real-time trading. That's what makes an ETF an ETF. Now, I know some of you are thinking, hey, Darren, isn't that basically just an index fund? Well, that's a great question, but here's the distinction. You see, an index fund is a strategy. It's built to passively copy the market or some segment of the market, not try and beat it. We talked about that in episode 20. An ETF is really a structure. It's about how the fund is packaged and how it trades. Now, most ETFs happen to track an index, so they're passive and they trade like a stock. And that's why you hear the two terms used almost interchangeably, but they're not the same thing. And a mutual fund, oh, by the way, as you recall, that's usually actively managed where someone is picking the investments and you can only buy or sell once a day. So if you're looking at a simple comparison, mutual fund, active management, once a day pricing. Index fund, passive strategy, usually priced once a day. ETF, usually passive, trades all day, often at lower cost. Now, I really believe that understanding those three, a mutual fund, the index fund, and ETF, gives you the foundation for most investing conversations. Now, I want to give you the honest version. You see, the fact that ETFs trade all day is a feature. It gives you flexibility and liquidity, and that's real and that can be helpful. But here's what I see happen with some folks. Hopefully not you, right? But they check their phone and they see the market's down 2%. So they panic and they sell. They sell that ETF because it trades all day, right? 2 weeks later, the market's recovered and they're still on the sidelines. See, the ability to trade at 10:47 in the morning doesn't mean it's a good idea. For most people that are in or approaching retirement, the best thing you can do with an ETF is the same thing you should do with any long-term investment. Own it, understand it, and leave it alone. So ETF, exchange traded fund, a basket of investment that trades on the stock market all day, just like a single stock. Simple concept, powerful tool, and now when you see it on your statement, you'll know exactly what you're looking at. And if you've been wondering whether the investments that you own actually make sense for where you're headed and what you're trying to accomplish, well, I'd love to have that conversation. So my question today is simple. Would it make sense to take a closer look together? And our commitment, as always, is we will serve you, not sell you, because we love, serve, and care for our clients so they can live their best life in retirement. And now that you've come this far, I'm going to ask you one more quick favor. If you found this video valuable or helpful, please do us a favor and hit that like or subscribe button so that others with the same question or concerns can find this channel. Thank you so much. God bless.